Thanks, Wilfred. If you remember when you had me on and you said, what would you do here? I said I would take some risk off. And that was due to two reasons. One is that the global economy was slowing much faster than some people anticipated. And secondly, the hope for a policy handoff from central banks to fiscal authorities was very high. And I felt that both these things were exaggerated by markets. So what's happened since is that there's a better understanding of quite how quickly the global economy is slowing, but there's still too much hope on the policy front. So yes, in terms of we are better reflecting the economic fundamentals, no in terms of we haven't yet reflected the policy reality.
Mohamed, there seems to be an increasing by the day, by the hour focus on the jobs market here in the U.S., whether it's that ADP number we got this morning, expectations around the monthly report, the government report on Friday. If we do see a slowing, which it seems like we are, how big of a deal is that, especially at this point in the cycle?
So it would be a big deal, and I'm not quite sure we're going to see a massive slowing. Why would it be a big deal? Because manufacturing is relatively small for the U.S. economy. And this is a global phenomenon. And so far, the domestic side of the U.S. economy has been doing very well. So if you see a significant slowing in either wage growth and or job creation, it will tell you that the domestic side is getting contaminated by the global slowdown. So it's a big deal, as is tomorrow's service number, as Steve Leisman said. These two numbers now take on a lot more importance than they did just a week ago.
Mohamed, if we don't see the handoff from monetary stimulus to fiscal stimulus, as you were discussing in your first answer, do we then have a recession in 2020?
Not necessarily, because, again, the domestic side of the economy is doing quite well. But if the problem with the handoff, Wilfred, is you just heard, the question is not whether central banks are going to be friendly. They are going to be friendly. The question is whether they can stay effective. Already in the case of the ECB, in my opinion, they are not just ineffective, they're actually now harmful to the economy. So keep an eye on that. I don't think the monetary authorities can save us from a recession, nor do I think fiscal will. What will save us from a recession, and I'm pretty optimistic about this, is the non-tradable sector, the domestic sector of the U.S. economy that's still in good shape.
To that point, Mohamed, I mean, given where U.S. Treasury rates are now versus other major economies in the world, including Europe and Japan, is there more ammunition for the central bank here to do more cutting and to have more of an impact than other banks in other parts of the world?
So they definitely have more room. And I'm glad you raised the differential element, Morgan. And I would encourage you to look at what's been happening to the differential in 10-year bonds between the U.S. and Germany. That has come down quite a bit recently, which tells you that the bond market is not just worried about the global economy, but is also having a more realistic view about the U.S. economy. In terms of the Fed, sure, the Fed has room to cut. But do you really want to use that now when the domestic economy is still doing well? I suspect they will cut because the risk of not doing so is high, but we shouldn't expect that to materially change economic outlook.
Mohamed, would a trade deal put all of this discussion as defunct and outweigh it all and put the economy back onto a positive trajectory?
If it's a durable trade deal, as opposed to a ceasefire, as opposed to a partial deal, yes, that would help. It certainly would help, but it has to be durable, Wilfred. What wouldn't help is something that is seen as short-term and just a ceasefire.